Hello and welcome to India Market Open. It's bright and early on Tuesday morning. Global cues, guys, are slightly negative, but we've been on a roll, 450 points in 2 days, and the party may take a little bit of a break, but the euphoria is on the street.
Absolutely. Morning, Samina. Morning, Agam. It's looking like we're going to have another good day largely. Asia is not showing that kind of spirit, but then, there is an inflation data set which has come in Japan, which has perhaps broken a bit of the mood there. The focus, though, remains on India since the US markets were shut overnight because of Martin Luther King Day. And what a close we had. So let's just take it back to how we closed yesterday. Fantastic figures. You closed very comfortably above the 22,000 mark and even touched the 22,100 mark and returned. IT absolutely led the show, were the stars of the show after the numbers of the big four IT companies enthused the markets completely. Focus, of course, today will shift to the financials space. HDFC Bank is the big one, but you have Federal Bank and other companies which would also come in with their results. A few of the other absolute stunners from yesterday, I would mark out the railway stocks for one. There is an anticipation that the rail budget or the money allocated for railways, even though it's a vote on account, is going to be 25% higher. That would take it to an unheard of 3 lakh crore rupees. So you had rail stocks having an absolutely fabulous day yesterday in trade. We, had inputs from technical analysts too, all through yesterday's closing and overnight. And 21,500 seems to be something that the Nifty will end up maintaining. In fact, Agam, is that the indication that seems very clear today?
Yes, it does. It certainly does. And the whole range has shifted upwards. Until yesterday, we had 22,000, which actually marked as some sort of resistance. It's now become a support. So that's always good news. And, the fact that the 500-point range has shifted higher, we're also now keeping an eye on 22,500. I'm not sure if that is a possibility as far as January is concerned, but now it seems that the fact that the writing has shifted on the higher levels, well, we are likely to see a little more strength, or at least the Nifty to sustain around here.
Very quickly, Agam, and these are data points that we usually look at, right? Your PCR.
Yeah.
Your PCR stands at a record high. The last time we saw PCR at 1.63 was all the way back in July 2023 when the sentiment was not very optimistic. Yeah. That, to my mind, would encourage some bearish sentiment. I'm not sure the wicks jumped to. If we can just pull up the wicks and take a look at that. And, of course, the GIF Nifty as well, Agam, Tamanna, is indicating to a morning of profit taking. It is indicating to a flat start. And I think this a 6% jump on the wicks in yesterday's trade. Now, the VIX is getting into uncomfortable territory, I would imagine. Yeah. The PCR is slightly higher. You've gone up 450 points in the last 2 days, largely driven by earnings that were in line with expectations. Let's not forget that tech hasn't impressed. All it's done is performed in line. Yes. But the euphoria is, I guess, there for everyone to see. And the fact is we are still an expensive market. A very expensive market now.
I do want to counter that and argue from the point of the bull side. The VIX has risen because the premiums have expanded, sure, but that's also possibly because a lot of participants are now buying calls.
At high levels.
At high levels. There is no doubt about the fact that the markets are stressed. But the Nifty put-call ratio at live highs, every time they make live highs, we tend to see the PCR go to around 1.6, 1.7. That's when we know that's really overheated. And I'm arguing for the fact that there could just be a little bit more left to this rally.
And a little bit more is 500 points from 22,000.
Not necessarily 500 points. not necessarily 500 points, and I really don't want to put a number. Yeah. But I wouldn't rule out, if we do see some amount of weakness this morning, sure, we could see some profit taking. But over the course of the next 2 or 3 days, I wouldn't really rule out a number which is higher than where we closed yesterday.
And also consistently, all your brokerage reports keep reiterating it's a buy on dip strategy.
Right.
And this is where I come back to. 2023, we went into the year with very negative sentiment.
Right.
A looming US recession, concerns in China, stress in the Eurozone. We ended 2023 with the bang. We're going into 2024 already euphoric. Yeah. Jan is a bad month, but it's turning out to be a great month.
Right. May I just add one factor which may come into play? And we've been talking about an overstretched market, an overheated market for a while. It's been defying all the odds. The FIs haven't really come in full force yet. And that completely, take this to the next trajectory. So look at what happened yesterday. You had about, after 4 sessions, FIIs turned buyers. They bought about 1,085 crores. DIS sold 820 crores. But in all of Jan so far, the buying from FIIs has only been about 3,400 odd crores. So there is a lot more dry powder left to come in. And then the question is, where do we go from here? So perhaps your 22,500 is not so far-fetched at all, Agam.
Well, I just want to add in one more point when it comes to index futures. And since you were talking about FIIs, FIIs is still about 64-65% odd net long. Again, the markets tend to get really stretched when that number goes above 70%. That's not come through yet. But I'm not suggesting that we have to hit that number before we start seeing a correction.
Also talking about FIs, and that should pertaining now to discuss HDFC Bank.
Yeah.
We've harped upon this for the last 10 weeks that large caps got to take leadership, which we are now seeing. I mean, the broader markets have underperformed in the last couple of days. If we need to move to the next leg, HDFC, or rather Bank Nifty's got to support. Bank Nifty gave the much-needed support in the month of December. Right. As we stand at the brink of HDFC Bank reporting earnings, we haven't seen that stock perform. Let's not forget that HDFC's weightage on the index is 13%. So when Agam talks about a move to 22,500, we will need HDFC to perform. HDFC also is a big daddy on Bank Nifty. Its weightage on Bank Nifty stands at 33%. Yeah. And in the last 1,000-point move on the Nifty between December 8th to 15th of Jan, HDFC has done absolutely nothing. So when this is the setup, and this is what you and me were discussing, right, Agam? Yeah. Brilliant bank. For the last 20 years, we've talked about how during Puri's reign, this was the 30% bank. It still is a great bank. It is highly undervalued, 3.2 times price to book. Used to be an FI favorite. I mean, 52% of the bank is owned by FIIs. Yeah. Solid earnings, but nothing's happening.
Speaking of even the valuations, let's pull up some of those interesting stats that I got around to. So FY24, and this is of course forward price to book earnings, that stands at around 2.1 times. This is lower than Kotak Mahindra Bank, standing at around 2.8 times, ICICI Bank, Axis Bank, SBI. SBI is, of course, an exception in this case, of course, because that's a public sector bank. But if you consider the other 3 private sector banks, HDFC Bank at the moment is the cheapest. In fact, HDFC Bank is also cheaper and at a discount as compared to its previous 5-year average, which comes in at around 3.4 times. So there's no doubt about the fact that HDFC Bank is not only going at a discount when it comes to historical valuations, but also its peers.
And that comes to Tamanna's point, that FI money is coming back. Yeah. You know, who's to say that it may not be HDFC Bank, and then you see Bank Nifty at 50,000, and then the party continues.
This is a market which is getting very, very difficult.
I can't decide whether I'm a bull or bear. That's my problem.
You want to be a bull. but the cues are that, if you put the euphoria aside, you need to ask some tough questions.
Yeah, and talking about tough questions, let's talk about, I think, Agam, you want to come in?
Yeah, I just want to make a very quick point on HDFC Bank. The 1,700 calls have so much open interest at the moment. It's 3 times taken all these strikes together. The question really is, are the markets betting in favor of HDFC Bank moving well above the mark of 1,700? That's something that we will know. If not today, then tomorrow post
And talking about that, HDFC Bank did make a pretty smart move in yesterday's trade. So it did gain 2%. It was a key contributor. Yeah. Only in yesterday's move when the markets made a new high. Some euphoria there before HDFC reports numbers. And talking about earnings very quickly, HDFC Bank is expected to report a net profit of 15,763 crores, largely flat, down by over 1% for the quarter. The net interest income is expected to come in higher by 8% at 29,550. But analysts across the board believe loan growth should remain steady. Deposit growth might be lower than expected, and they need to ramp that up in order to make better use of their funds. Margin expected to improve, and asset quality is expected to be stable. So key things to watch out for the stock will be a key point of focus. Earnings will not come out in the first half of the day. They'll come out closer to market closing. But the stock will be what traders will be sort of playing around with ahead of those earnings. We We've also got Angel One that reported numbers. I'm going to quickly take you through those. Again, important because capital market players have been very significant in the last couple of months in terms of market action. Disappointing numbers there. On the face of it, net profit came in at 260 crores, which is up by 14% year on year. Revenues are up 41%, but margins for the quarter have declined 570 basis points to 37.6% a quarter. From the face of it, it looks like there could be an increase in upfronting a lot of the OPEX costs, so costs like marketing, spends that have been, of course, spent by Angel One to acquire clients could have been upfronted, and you're seeing that in terms of their margins and net profit as well, while revenues, on the other hand, have gone up quite sharply. Other expenses have risen 2 times to 319 crores. Geo as well. Just a quick mention here, they're still ramping up business. Treasury has been what is giving them the numbers so far, at least. Quarter on quarter, you're seeing a decline because the last quarter saw a dividend payout by Reliance Industries, on back of which their total income came in much sharper. This quarter, there was no dividend payout from Reliance Industries, so you're seeing that number in reflection. Treasury really is what's driving up this business. They are ramping up their product offering, but all in all, too early to call it on Geo Financial Services. But the stock, I think, will look beyond those numbers and give credit to the fact that they're still at a very early and nuanced stage of business.
Oh, the only thing I want to add on JFS, it's one of those companies where the promise is perhaps more exciting than what they have delivered so far. And their investor presentation yesterday was quite interesting because they talk about their strategy. They have also pivoted because of the RBI's recent moves and want to focus more on secured lending. So that's going to be interesting to see how the stock responds. It already ran up a fair bit ahead of the numbers. Since we're talking about results which came in after market hours, I just do a quick mention maybe of Kesoram. The numbers were a bit disappointing. Remember, the whole news flow over here is about demerging the cement business, which Ultratech wants to acquire. Having said that, there was a slight improvement in their margins on consolidated basis at about 10.5% versus 8.08%. But the cement business continues to degrow, and the textile portion of it is not doing too well either. So I'd watch out for Kesoram. Just a few other companies which have had news flow may react today. I'll talk about BLS. Now, a small company which is into visa and consular services in across the globe, shot to fame because of its run-in when India had its run-in with Canada, and BLS pulled all issuances of Indian visas to Canadians. But the news over here is that they're acquiring 100% stake in a Turkey-based visa consular service provider. Now, this is the second kind of acquisition in the last couple of months. So they're expanding their footprint in new geographies and businesses. That stock was already up about 5% yesterday. I spoke about the rail pack, and that is one entire space to look at. A lot of views coming in from analysts that if you're looking at overheated spaces, maybe this is one of them. I would say perhaps wait and see what happens in the budget. RVNL has some news flow, though. The company has emerged as the lowest bidder for 11 kV line associated works. It's a 251 crore order where they'll supply, install, testing, and the whole end-to-end of it. I would say the aviation pack, one to look out, and there's a Jefferies report out as well today on the aviation pack. You had passenger data numbers. Interglobe is completely flat in its market share, while SpiceJet has actually slipped to 5.6% for the last month. But the focus, of course, remains on HDFC Bank, where you have the big numbers coming in today. They will announce its December quarter earnings today, and analysts expect overall healthy numbers for the quarter on the back of steady loan growth and stable asset quality. My colleague Vishwanath Nair joins us for more. Vishwanath.
HDFC Bank is set to announce its third quarter results on Tuesday, where the bank is expected to report a marginal dip or a flat net profit on a quarter-on-quarter basis. What analysts are pointing out is that there's likely to be a slightly higher provisioning requirement during the third quarter, primarily because the Reserve Bank of India has raised the risk weights on certain unsecured loans, which makes it slightly more expensive for the banks to lend out this kind of money. Apart from that, the net interest income for the bank bank is expected to rise by about 8% odd. That is what the analysts are estimating at this stage. What we do understand is that deposit growth is likely to be slightly slower than what was previously anticipated, while the loan growth is likely to remain stable. Now, of course, when the bank released its provisional figures, what the bank had pointed out was that total advances would rise about 5% on a quarter-on-quarter basis to a little over 24.6 lakh crore, close to 24.7 lakh crore, while on the total deposit front, you would see deposits rise about 1.9% quarter-on-quarter, a little less than the 2% mark, well, with deposits lower than advances at 22.14 lakh crore. Now, all of this points to a situation because a bunch of loans were transferred into the HDFC Bank portfolio because of the merger with HDFC Limited. However, on the deposit front, the bank is still catching up, and therefore the credit deposit ratio for the bank is on the higher side, above the 100% mark. However, the bank is expected to increase its branch network over the coming year and thereby improve the deposit numbers in the coming quarters. What we also understand is that the NIM position for the bank is likely to have bottomed out in the second quarter, and from the third quarter onwards, we're likely to see the net interest margin improve quarter on quarter at least, with the CASA ratio also improving for HDFC Bank.
And those are the expectations from HDFC's third quarter. But let's get in another street view. We have Ashutosh Mishra. He's the head of research of institutional equity, Ashika Stockbroking. Ashutosh, good morning and thank you so much for joining in. Let's start with your assessment or perhaps your expectations from HDFC's third quarter. What are you penciling in?
So we are penciling in a good growth on NII front. The simple reason is that loan growth remains very strong, and quarter on quarter we are going to see the improvement in the NIMs. Last quarter we have seen that they were carrying the excess liquidity because of the merger. So the hangover of that excess liquidity will be slowly coming down, and that's why we will be seeing the improvement in the NIMs in the third quarter as well as in the fourth quarter for the bank. When we put this along with the loan growth, it clearly indicate improving performance on NII front, which will be the key driver for the earning for the bank.
You want to come in and tell us what is your view, Ashutosh, on asset quality? Is there any concern when we talk about HDFC Bank in terms of slippages and asset quality specifically?
No, we are not having any major concern on asset quality front. Normally, seasonally, first quarter is where they have some concern comes into asset quality because of the agri loan portfolio. That is seasonal impact. Rest of all, in normally third and fourth quarter, we are not expecting any impact on the asset quality front in the HDFC Bank. And with the HDFC Limited loan coming in, which is much more stable portfolio from the asset quality perspective, overall, this ratios will continue to improve going forward from here.
Ashutosh, I want to talk about NIMs because on one hand you have tighter liquidity conditions, and that is comes in amid very strong credit growth, if I may say. On the other hand, it seems like it's imperative for banks to raise deposit rates as well to, of course, bridge the gap in that sense. Even if NIMs may remain stable this time around, is that an area you'll be watching out for very keenly, at least for the next few quarters going by?
So HDFC Bank was going through an event in the last quarter because of the merger and the converting the NBFC balance sheet into the bank balance sheet, and that's such a large balance sheet. Because of that, they were carrying the excess liquidity, and that was the main drag on their NIMs over the fourth quarter, first quarter, and the second quarter result. If you look at that, drag is behind us, and that's why if you see in the market, in the shorter tenor, HDFC Bank has not raised the rate, whereas many other large banks has raised the rate. Even SBI has raised the rate. So clearly, if we look at the market and try to see which bank is increasing the interest rate in which tenor, we are not finding that HDFC Bank, despite a strong loan growth, in any adverse situation position on the liquidity front. So at least I am not concerned on for the this quarter and next quarter that HDFC Bank is going to face any issue on that front. Yes, for next year, we need to see what will be the loan growth and what will be the system deposit growth, because that is a very important thing which we need to watch for FY25 perspective.
Yeah. Hi, Ashutosh. Tamanna here. I want to get your view on deposit growth. Now, even as we've been seeing some of those business updates coming, and the expectations are that deposit growth might be a little muted for HDFC Bank. Is this going to be a concern going forward, even as cost of funds stays stable?
No. The simple reason is that they were carrying the excess deposit or excess fund in their balance sheet because of the merger. Now they will first utilize that excess deposit, and then only they will be aggressively going for raising deposit in the market. So that's why lower deposit growth is a positive and not a concern at this point of time, because we all know that that they have to first use the excess deposit which they were taking up in the fourth quarter and first and second quarter of the current calendar year. And now only after consuming those deposits or deploying those deposits, they can go and raise the more deposit.
In terms of the merger overhang, till when do you expect that to continue? And in light of the new RBI proposed guidelines on HFCs, do you see that to have any impact at all?
HFC guideline, we have to still see that if there will be any impact. I don't see any major impact to coming in for that because it's already in the bank business and we don't see major part of it. But still, we need to look into that a little bit more at this point of time. Yesterday evening only that whole guidelines has come. But merger overhang, slowly bank is coming out of that. And we are going to see improvement in the NIMs as well as growth proportion of the bank going forward from here. Because two things happen in the merger. One, the NIMs has come under substantial pressure. And the fourth and first quarter, their growth come under the pressure because of some part of the HDFC Limited book cannot be carried on into the bank business. And that's why they have to take out that loan. So the impact of all those things will be get reflected in the next 2 quarters, and post that we are not going to see any major negative coming from that. The way they are expanding their branches and other businesses, it's clearly indicate that on the growth front, they will continue to surprise the market. Even on a quarter-to-quarter growth, if you look compared to the many other banks which has given the pre-quarterly numbers, at their size, numbers looks very impressive.
So within its peers, Ashutosh, would you say HDFC is head and shoulders ahead, or how would you rate them in that pack?
So when we do the peer analysis part of it, clearly that this bank has come out of the merger thing, and that's why we see, and valuation is also looking quite reasonable. So among the peer, we definitely like HDFC Bank. All these hangover is behind us, and when the new allocation will come, probably this banks with the improved performance will able to attract much more interest.
Sure. Moving beyond HDFC Bank, what are the other 2 to 3 banks that you like in this space? Any sort of strategic investments you would be looking to make ahead of earnings?
So we like IndusInd also, and Axis second in the private sector space, and SBI in the public sector, SBI and Bank of India from the private sector space. We also, in a smaller bank, we like Bandhan.
Okay, so it's in that pecking order, HDFC Bank, IndusInd Bank and Bandhan. I'm not sure if we covered the space, but I want to talk about non-lending institutions, so Angel One and Anand Rathi. We saw those numbers from Angel One. On the face of it, revenues have jumped over 40%, margins have come under pressure, profitability hasn't improved. And what we've also realized is when you look at numbers or new client additions, while the Angel Ones and Anand Rathis have gained clients, the industry as a whole has not added new folios. So it seems like somebody is losing while the others are gaining. Keeping that in mind, how are you approaching the capital market space players? And also, if you've got a specific view on Angel One, if you've tracked it, looked at those numbers, it'd be useful.
So if you look, all these capital market players were seeing a very good client addition, and especially activity is also quite going up. Where we see things, especially working in their favor, especially the listed one, they are really ahead in the terms of the way they are marketing their product, putting the things in the right direction out there. But if you look from the valuation perspective, I'm not comfortable at this point of time. We'll wait for it. If I need to play the capital market, I will play through the exchanges. Like we have BSC is a much better choice to look at this point of time. We have AMCs, like if you look HDFC AMC's result, that is a better play in my view than going through the brokerages.
Last question, Ashutosh, and of course all the focus is on HDFC, but Federal comes out with its numbers today as well. Any view there, or what are you looking out for?
So key market will be at this point of time focused in the Federal Bank more toward the management transition. Rest of all, bank is doing quite well on all major parameters. The growth, the margins, and the asset qualities are doing quite well out there. Key important point will be who is going to come, because RBI has not given further extension to the Mr. Shyam Srinivasan. So we need to look at that. Who is going to come? What will be the roadmap from the new management perspective? How the board is taking it up? Is there any RBI has found anything because of that he has not given extension to the Mr. Shyam Srinivasan? So these will be important things to watch out from the market perspective.
Right. Ashutosh, brilliant talking to you this morning. I guess you've got a busy Tuesday tracking those earnings that will be flowing in. In the meantime, like we said, it's going to be a quiet start. The focus will be on earnings. The focus will be whether or not Bank Nifty will do what it should be doing. At this stage, of course, stocks in the tech sector might take a break today. But it's all about Davos, and India, we believe, will get capital not because of China +1, but because India anyways is attractive, says Rishi Kapoor, co-CEO of Investor Corp, and in conversation with my colleague Neeraj Shah at Davos. He explains why India can afford to command and demand higher capital inflows.
We are a $3.5 trillion economy, right? Our market cap is actually slightly higher than 100% of GDP, right? And we are at that inflection point in terms of GDP per capita where the level of affluence ought to grow. On an absolute basis, therefore, India should get its fair share and more of the capital flows, right? It is not about reallocating. It is about an absolute level of capital flows. Because it demands it, there is a need, and it commands it because the fundamentals are in place, right? You have a young demographic. You have a digitally native population. You have growing levels of affluence. You have a growing middle class. You have two major secular trends shaping the global economy, both of which are supportive tailwinds for India. The energy transition and the embrace of digitalization and artificial intelligence. India has been called, I think perhaps wrongly so, the back office of the world, because everyone wanted to call somebody else the factory of the world, right? But what does back office actually mean? We have the knowledge workers. But what do you think is going to be the sector that is most beneficially impacted in terms of boosting productivity levels as a consequence of artificial intelligence? Knowledge. The knowledge services sector is going to be probably the biggest beneficiary in terms of improved productivity. And the energy transition, we are the biggest consumer of that energy transition as a country, right? So I think, in an absolute sense, India sits at the crossroads of, a moment in time, I guess. Maybe we'll look back at, today's discussion 20 years hence and we say, well, that was on the 15th of January, 2024. But you get my drift, right? I think there's a point in time today for India where it can afford to demand and command absolute levels of capital allocation based on fundamental value and merit.
All right, so the mood is definitely upbeat in Davos. And remember, you're going to be seeing a lot of our coverage from Davos all through this morning and all through the day, so stay tuned for that. But right now, very short break. On the other side, Agam Vakil is joining in to set us up on the F&O segment. It's Fin Nifty expiry, a lot to look forward to. Stay tuned.
Welcome back to India Market Open. Let's take a look at the top headlines at this hour. India has a special place at Davos. World Economic Forum chief says economy can reach 10 trillion. IKEA wants to source more, and Investor Corp says why India is attractive for investments. Houthis threaten to hit more US-owned containers while Iran seizes yet another oil tanker in Oman. Oil edges lower as investors pay little attention to rising Middle East conflict. And government reduced windfall tax on crude oil to 1,700 from 2,300 rupees. And the Adani Group offers bigger flats to residents of Dharavi as part of redevelopment. And all eyes on HDFC Bank third quarter results today. Asset quality is expected to remain stable with steady loan growth. Well, those are the top headlines that we're tracking at this hour. GIFT Nifty is indicating to a slightly negative start. Qs, remember, coming from Asia are also quiet. Agam is standing by with more on the F&O picture. Agam, 450 points in the last 2 days. Yeah. Tech, Reliance and Pharma have led the way up. And so is real estate, actually.
Yeah, absolutely. A whole load of sectors and stocks to keep an eye on, especially with the kind of traction that we have seen on the benchmarks. With the Nifty at the moment, while advancing significantly, comfortably above the mark of 22,000 and also taking out that resistance which now becomes a support as we move into trade over the next few days and weeks. As the Nifty advanced by around 1%, we saw an addition of around 4% yesterday towards what seemed like fresh longs. Moving on, as far as the Bank Nifty goes, the picture wasn't a lot different. We did see the underlying advance by around 1%, but we didn't see as much in terms of open interest addition. That said, when it comes to the options market, for now, in terms of changes on expected lines, we saw a lot more writing around the 22,000 put. Now, even as the Nifty moved higher and consequently, because of this, we also saw the 22,000 take the one as the 22,000 put is the one become with the maximum open interest. So let's talk about distribution then. And that's where you'll see that your 500-point range has shifted higher from, and the base now stands at around 22,000. And on the higher end, we're starting to see a lot more accumulation around 22,500. And that said, we're expecting the Nifty, or at least the participants are betting on the Nifty to move within this range over the course of the next few days. Now, we also have the Fin Nifty expiry, remember, today, and there has been a lot of resistance building around 21,600, 21,700. In fact, a lot of writing coming through as far as those calls go. But it's a wait and watch on that one, since we are already at 21,500. That's where we have a little bit more puts being added to. But that's as far as the Fin Nifty goes. We are keeping an eye on HDFC Bank. And I want to mention just one specific strike, that is the 1,700 call. As you can see here, a significant amount of addition here. And we don't necessarily, this doesn't necessarily mean that the writers, that this is the writers' way of looking at things. We could perhaps see a little bit of fillip, but today's day of trade will determine a lot with respect to HDFC Bank, with the kind of earnings that come through, and potentially if we do see the earnings come post-market hours, then tomorrow, of course, will be a completely different ball game. But for now, keep an eye on 1,700 calls as far as HDFC Bank is concerned. Moving on to stocks. Let's talk about a handful of names which, in fact, were under pressure yesterday. L&T Technologies and ICICI Lombard will announce earnings today. And they were weak ahead of earnings, seeing fresh shorts coming through. ONGC, on the other hand, saw longs along with Tata Communication. And among stocks which saw unwinding in trade today, well, about a short covering, at least for the top open interest losers. So Metropolis, BHEL, Polycab is an interesting one, moves back above the mark of 4,000 now, HDFC, AMC and Gujarat Gas. So keep an eye on some of these counters. But at least as far as the benchmarks are concerned, what do we do, and what are the trading ideas, when it comes to some of these stocks and sectors? Let's get in Ajit Rambhia of Ajira Ventures, who's joining us on the show this morning. Ajit, good morning, and thank you so much for joining in. As usual, let's start off with how you are looking at benchmarks like the Nifty and the Bank Nifty, and what is your expectations from there going over the next few days?
Very good morning, Agam. It is a pleasure to be here on NDTV Profit. Well, it is an exciting time for all the investors as the markets are hitting all-time highs. Now, when we talk about Nifty and Bank Nifty, the question on everyone's mind is how high can it go? Nifty has been on a remarkable journey, dancing around the record levels. It has very strong support at 21,900 levels, and the resistance could be at around 22,200 levels, which is a Fibonacci level. And when it comes to Bank Nifty, we have the HDFC results today. The previous high of 48,600 would act as a resistance, and we can see the support at around 47,800 levels.
All right. So, Ajit, let's talk about trading ideas then. And I believe one of them is SBI, if I'm not mistaken. Can you take us through that strategy?
Yes, sure. So we have a bullish outlook for SBI. We can easily initiate a butterfly strategy. We have a flag formation over here, and any breakout above this level, we will see a good run. So for our strategy, we buy a 640 ATM call at 11 rupees 45 paise. We sell 2 calls of 670 at 3 rupees 20 paise. And lastly, we hedge it with 1 700 call at 1 rupee 25 paise. So the cost of this strategy is mere 6 rupees 30 paise, and the maximum profit can be 23 rupees 70 paise. So if it closes at our target price of 670, we earn the full profit.
Absolutely. So maximum profit can be at around 670. Of course, this is pertaining to the 25th January expiry when it comes to State Bank of India, playing for a long butterfly on that one. And Ajit, I believe you also have one more on Tata Communications, if I'm not mistaken.
No, we have one on Tata Chemicals.
Right.
Yeah, so Tata Chemicals is consolidating in a range, and we recommend to initiate an iron fly strategy for this counter. Here we short sell a 1120 straddle at a combined premium of 53 rupees 45 paise, and cover them up by buying a call of 1180 at 9 rupees 50 paise and a put of 1060 at 7 rupees 60 paise. So here the maximum profit comes to around 37 rupees and the maximum loss can be 23 rupees.
All right. So playing for consolidation as far as Tata Chemicals is concerned. And in this case, Ajit is also going ahead and trying to risk the upside or the lower downside swings by also going ahead and buying the wings. Is there anything that you wanted to add, Ajit?
Yeah, so, well, apart from this, I personally love to trade stocks with special situations. So for now, for example, we have Bajaj Auto with a buyback offer of 10,000. So we can very well form a bullish strategy over here. And again, Adani Enterprises is offering shares of its airport business to all its investors. So we can expect a short-term surge in these counters too.
Okay, so some very interesting pointers made out there as far as stocks go. So Ajit is also positive when it comes to Adani Enterprises and Bajaj Auto. Of course, we'll continue to keep an eye on that one under special circumstances. But on that note, Ajit, thank you so much for joining us and getting us those trading ideas, also giving your view on the markets. And with that, it's back to you, Tamanna.
Right, thank you for that, Agam. So we're looking at an exciting morning coming up. But let's focus on what should be the stocks on your radar, because a slew of companies have reported their December quarter earnings. Some of them came in after market hours yesterday, and Varsha is joining us and taking us through those numbers very quickly. Yes, Varsha.
Morning, Tamanna. So let's start with Geo Financial Services, wherein total income was down 10%, while net profit was down almost 21%. Now, if you see, the decline in profit was largely due to higher other operating expenses, which rose 69% sequentially. Also, the staff expenses increased 60% quarter on quarter. On a consolidated basis, if you see, the company's net profit fell 56%. Now, this was due to fall on account of no dividend income in the quarter ended December. Then we have Angel One, wherein total income was up almost 40%, while margins were down 570 basis points. That was to 38%. Now, this was due to increase in expenses. There was headcount addition in asset management business, data and analytics, also higher spends on tech infrastructure, demat charges and CSR. If you see, the other expenses for the company has risen almost 2 times. Net profit was up 15% at 263 crore. If you see, the company's daily order orders on an average rose 57%, while client acquisition surged almost 49%, and they acquired more than 1 million clients in a month and 2.5 million clients in a quarter. Then we have Choice International, wherein revenue and net profit was up over 2x now. If you see the other highlights for the company, broking and distribution business grew almost 92%, while number of demat accounts grew 26% year on year, and AUM for the mutual fund grew 34%, while total loan book for NBFC segment stood at 468 crore. Lastly, we have Kesoram Industries, where revenue was down almost 3%, while EBITDA was up 27%. If you see the margins for the company, margins have been 11% versus 8% last year. Now, this was due to lower raw material expenses. And lastly, there was net loss of 49 crore versus loss of 48 crore last year. So this is all we have today.
All right. Just to add what Jeffries is saying on Geo Financial Services, and they are marking out that pretty sharp drop in Q3 profits Q on Q, but also looking at the reasons for it. The big question really around Geo Financial Services is, and when it first came into being, was whether it's going to take out or take on, I should say, Bajaj Finance. And that really looks like the threat may have receded. That would be the big takeaway from the numbers, as we say. But just to go back to what Jeffrey says, they say a gradual ramp up of lending and payments business is being seen. Capability building is largely done in unsecured PL and consumer durable loans. And they say Geo Financial Services taking a balanced approach to growth. They see a limited risk for BAF and banks, despite initial concerns of increased competition. And they've put in a price target of 9,470 with a buy for Bajaj Finance, that is for RIL. They have rated a buy with a price target of 3,125. But it is going to be an exciting morning in terms of new listings as well. And I just want to take a minute. We should chat about Jyoti CNC Automation. Remember, the end of 2023 was all about the new listings. And this is the first one to kick off. It's an interesting company because it's in a very niche space. It makes customized machine tools which are used in the defense sector, in aerospace, it has a pretty solid market share. It's expected that this 1,000 crore IPO will list decently. 10 to 15% premium over the issue price is also expected. So that's one to watch out for today. You want to come in, Samina, on Jyoti CNC?
No, I think we've got Anushi who's standing by with the other stocks. But this one will be important. The grey market also indicating to a 20% premium. So you are expecting a pretty solid gap up. And remember, this is one of the few big listings on the main board for the year, for the calendar year 2024. But Anushi, beyond this, you've also got a whole bunch of other names that we will be tracking in today's day of trade. So it's all about earnings, and that's the focus. But a few block trades, a few other movers, order wins maybe.
Right. So I have 5 stocks to watch out for today in the name of order wins and other deals. So I'll start off with Nalco first, which has signed Government of India's first ever lithium exploration and mining through Kabil, which is Khanij Videsh India in Argentina. Now, this Kabil is a JV between Nalco, Hindustan Copper and Mineral Exploration Company. And this is set to explore and develop about 5 lithium brine blocks over there at an estimated project cost of about 200 crores. Next on the list is Sarda Energy Minerals, which has received a 150 crore order win from Genzol Engineering for installation of solar power plant in Chhattisgarh. In other updates also, the company is going to be declaring its Q3 FY24 result on Feb 3rd. Then Rail Vikas Nigam was buzzing yesterday, the stock gaining about 9%. So in here today, there is a news in which the company has emerged as the lowest bidder for consideration of about 251 crore for supply, installation, testing and commissioning of about 11 kilovolt line associated works, which is to be executed within the 24 months time frame. Then there is PNC Infratech, which has signed definitive agreements with Hindustan Infrastructure Trust to dispose about 11 hybrid annuity road assets and 1 toll road asset at an enterprise value of about 9,000 crores. So these toll assets made about 42% of its consolidated revenue. And then DCS would be in focus ahead of its QIP. with an indicative issue price of about issue size of about 500 crore and issue price of about 341, which is at a 7% discount to its yesterday's closing price. But also in the bulk block which you were mentioning, there was Zomato, which has emerged, in which there was a large trade yesterday wherein Motilal Oswal mutual fund bought about 0.5% stake, sold about 0.52% stake, whereas Society General bought about 0.38% of stake. So Motilal Oswal did have like about 1.4% stake in the company earlier. So that's all that you should be tracking today.
Right. Thank you, Anushi. It's a whole bunch of stocks and big block deals that have taken place. These stocks, of course, will be in focus. A few of the names that were doing really well yesterday, Tamanna, of course, highlighted the brokerage calls on Geo Financial post its earnings. The stock actually went home with gains of nearly 5% on very large volumes yesterday. So that was what we saw in Geo. Remember, there's nothing much that the business is writing or talking about. Revenue has largely been treasury income. Last quarter to this quarter saw a decline in that because last quarter captured the dividends that were announced by Reliance Industries, which is a large chunk of the treasury income that Geo Financial has. Brokerages, though, largely optimistic. The stock has up 5%. You also have IRFC that Tamanna might have indicated, talking about railway stocks. Now, this was the big mover, and it's not just yesterday. The stock is up 300% in the last 6 months. In the last 5 days as well, if you can pull up the last 5 trading days, the stock has been one of the top performing counters in trade in a beautiful market as well. So for the week, we're up 30% on IRFC. MRPL, again, there were some brokerages that reported last week, in fact, last Thursday, Friday, on a few upgrades on a couple of the oil and gas stocks. MRPL was one of those. On back of that, the stock has been seeing consistent buying, up 26% for the week, went home with gains of nearly 6% yesterday. But to talk more about these stocks, Amar Singh, Head Advisory, Angel One, joins in. Morning, Amar. Thanks for joining in. 450 points in 2 days on the Nifty, 4 straight day rally on Bank Nifty. As we stand pretty at 22,000 odd, what is the way ahead? Are you extending further long calls on the Nifty? Would you take profits off the table? What is the strategy?
Yeah, very good morning to you, and thank you for having me on the show. Talking about Nifty, what we are seeing is that the heavyweights have really supported Nifty in a big way. First the IT, and then we've got Reliance, HDFC. So these are stocks which really have a very significant weightage on the Nifty, and we've seen them perform exceedingly well. Also, most of the technical, I've been telling this for quite some time, is that most of the technical indicators, some of them definitely in overbought zone, but other technical indicators clearly indicate that there is no trend change in sight. So effectively what it means is that any pullback should be used as a buying opportunity because Nifty has reached a crucial zone of resistance. Earlier it was around 21,800, 900 zone. Excuse me. So that's trading above that level, significantly high, above the 22,000 mark. Also, if you look at the OI data, if you look at the futures data, so we've seen long built up happening in the last few days. But it's very important that at the current levels, how these 4 or 5 stocks, primarily it would be HDFC Bank, it would be Reliance, it would be, I would say, Infosys, it would be TCS, how these, and ICICI Bank, these 5, 6 big names, how they actually perform, because they have a significant, if you add a couple of more, they have almost 55% weightage on the Nifty. So these stocks would definitely are the ones that you should definitely watch out for. As far as HDFC Bank is concerned, which has the major weightage, so that has I would say rallied, but still it's some way distance from its resistance of around 1700 level. So that's a level to watch out for, because what we are seeing in Nifty is that Nifty and Bank Nifty still we are seeing some different sort of movement. Nifty trades at all-time highs, whereas Bank Nifty is not. So that's more primarily because of the IT rally that we witnessed. So, and other technical indicators in terms of percentage of stocks which are trading above the 200-day, that's exceptionally high, above 87-88%, that range. If you look at the advanced decline, that also is very strong across sectors we've seen. But and also India VIX is not much of a worry. So these are factors which clearly tell that overall the trend remains strong and the bulls are in control. And I would say the global market and macros have also supported. So I would say be on the long side. Yeah, on any dip can be used as a buying opportunity. But if you talk about the levels, so for Nifty, short-term support is around 21,900, 950. That's an immediate zone of support. On the upside, resistance comes around 22,150 level.
Aamar, good morning. It's also Fin Nifty expiry. We've been talking about HDFC Bank and the numbers awaited. Your call on the Bank Nifty and on a counter like HDFC ahead of the numbers?
Yeah, I would say that if I look at, first I'll talk about HDFC Bank and then I'll come to your Bank Nifty. So if I look at HDFC Bank was in for consolidation and it is still in for consolidation. We did see the bank rally yesterday because it was around crucial support zone. So if I look at HDFC somewhere around 1600, 1650, that's an immediate support zone. Currently it's around 1672. It has got resistance around 1700. So till the time we don't see HDFC breaking and sustaining above the 1700 levels, I would say it could be because that's not only a double top, that's a very crucial zone of resistance for HDFC. HDFC tried, if I go back in time, so it tried reaching that level in April 23 and then again in July first week, again as recently as December. But it's not able to close above 1700 levels. So that is a major zone of resistance. If HDFC Bank manages to close above that level, because that has a weightage more, almost 30% more weightage in the Bank Nifty. So if it's able to sustain above that level, so then we could see a significant rally. Otherwise, we could witness some consolidation. On the downside, HDFC Bank has support coming around the 1600 levels. Now coming to Bank Nifty. Bank Nifty is very strong on the medium term, intermediate term trend. Charts very strong on the short term. We are seeing some consolidation. So upside resistance is around 48,600, 650. Downside support for Bank Nifty comes around 47,500, zone 500, 600. So it's more of a consolidation that's visible also on the daily charts.
Aamar, can't not talk to you about what's happening in tech. That pretty much should be attributed for that big move we saw in trade over the last couple of days. Nifty IT is up 7% in the last 4 days. Infosys trades at a 52-week high. How do you play Infosys this morning? There was a little bit of consolidation we saw after that big up move. Any of these tech stocks that you spot a trading opportunity in now that the big four are behind us in terms of earnings?
See, Infosys, if you look at Infosys earlier, Infosys was having resistance around the 1500 level. Then if we go back 1620 levels, and if I go in December of 2022, so it had a zone of resistance around 1670. So what Infosys has done is that the structure of the charts definitely has changed to positive because it's sustaining above a major zone of resistance, which was around 1580, 1600 zone. Now, the next level to watch out for Infosys is somewhere around the 1670, 1700 zone, but the trend remains positive from a short-term perspective as well as an intermediate-term perspective. Long-term, we've seen the stock on the monthly charts. Some of the technical indicators have turned positive, which were earlier indicating some sort of consolidation. So we'll have to watch out that Infosys needs to sustain above the current level. So at least it needs to sustain above the 1600 level because earlier that was acting as a zone of resistance. Now that becomes a short-term support. So 1600, 1700 is a range that one should look at Infosys. Upside, if we do see a rally, we could witness some profit booking around those levels. For any major rally, then 1700 has to be breached and sustained above that.
Aamar, good point noted on Infi. What about Wipro? We saw it open gap up, went up all the way 12%, finally saw some profit taking, closed the day at 6.5% gains. So your word on Wipro and any of the broader market IT names, and also Emphasis, I don't know if you tracked that one, but that was an aberration. It actually went on with a cut of 3% yesterday. So anything in the space beyond Emphasis?
So if I look at first talking about Wipro, Wipro did rally significantly yesterday, but it gave up some of the gains. Still, it's up by 6%. So the high of yesterday is something which is very important and crucial, because a lot of people, a lot of investors or traders would have bought into, and they would have got, I would say, trapped around those levels. So 1525, 1530, 35 zone. Yesterday's high is around 529. Sorry, 529. So that's a zone of resistance of 525, 535. That's a zone of resistance that one should watch out for. If Wipro sustains above that level, then we could witness some upside move. Otherwise, we could witness some consolidation. It has got very strong support coming around the 480 level. So it's a small range for Wipro. 480 and 530. That's a range that we see in Wipro. Talking about the other stock which you mentioned, Infosys. This is one stock. Technically, if you ask me, on the daily chart, there is bearish divergence. On the long term and the intermediate term trend, there is some positive momentum. But till the time the stock doesn't take out the 2800 level, because roughly around that was the high in the last week of December. So till the time it doesn't take that out, we could witness for some consolidation. On the downside, the stock is supported around the 2500 levels.
Well, Dharmesh, stay with us. Aamar, stay with us. Dharmesh joins in as well. We're gearing up for pre-open. We'll take a break. We'll come back and continue our conversation. So stay tuned.
Just a minute and a half left for pre-open. Are we looking at a bout of profit booking? Are we going to see at least one bout of profit booking before the budget is concerned? At least the implied open seems to suggest so. Dharmesh Kant, Head Equity Research, Chola Securities, joins us now on the show. Very good morning to you, Dharmesh. Let me begin with your take on the big numbers of the day and focus on HDFC. And the way financials are expected to move in. Now, from what we saw in the business updates, deposit growth was a concern. The squeeze on NIMs was a concern. Do you think that will be dissipated going forward? Is your bet on banks?
Yeah, good morning. Definitely, I think HDFC would do better than the peers as far as going forward. That is what I mean to say, as far as deposit growth and credit growth is concerned. Because what they have done in the last 2 years, they have made a tremendous expansion on the brick and mortar branch model. So that is going to reap benefits for HDFC Bank now. And I mean, in the benign environment which is there for the credit growth segment, the banks which have a better reach and better software in place are the ones which are likely to get more benefits. So definitely I'm looking forward to it. But this quarter, Q3 earnings won't be great for HDFC Bank as far as, asset quality is concerned, and some slippage on the credit growth side is also likely to be there.
All right, let's just take a look at what your pre-open is looking like. A little chaotic in the first few seconds, but we'll wait for that to settle in. and see what kind of a day we've had. Just remember that Indian markets have defied all expectations time and again on commentary that we could be going into overbought territory, that there is a frenzy. Well, time and again, those expectations have been defied. We'll wait and see where those pre-open rates settle, but right now you're looking like you're in for a good start. Meanwhile, let's quickly go across to my colleague Shesha. She's speaking with the management of Tata Consumer. Remember, they've been on a shopping spree. They've acquired 2 new brands with the hopes of bumping up margins. Let's see what Sunil D'Souza is saying.
Now, Capital Foods, the 2 brands of Ching's Secret and Smith & Jones fit perfectly within our pantry and mini meals platform. Whether it is pastas, noodles, chutney, sauces which go into pantry, or instant noodles and soup which goes into the mini meals and snacking platform. And in Organic India, it adds tremendously to the premiumization strategy on our core, which is tea, with their tea and infusions, and their supplements portfolio, which is a Horizon 3 future portfolio for us. So from a strategic fit, it was perfect. From a financial fit, again, these are high margin, high growth. The categories are high growth. They have high market shares in the categories that they operate. We've always maintained saying we would like an India acquisition, but with international legs. Capital Foods has very strong links with the ethnic retailers globally. Organic India, half their business comes out of the US, and they've got strong opportunity globally. So they've fitted perfectly. Both of them, Organic India started talking to us about February, March of last year. And Capital Foods, Goldman Sachs was the firm running the process, which was in about March. So it's taken us roughly, I would say, 11 to 12 months. But because we've been very, very clear that A, it fits in strategically, and B, it adds to our financial muscle, we've been very clear we've gone after it.
Okay. Got it. So when you say that it adds to your financial muscle, I would like to get some numbers from you. Like if I have to look at Capital Foods and Organic India, your volumes for the food business that grew at about 6%. So how much these 2 businesses are expected to contribute to your overall volumes? I understand that, you will have a distribution to scale up, which is a massive.
Yeah, so I start with the distribution piece. Just as a perspective, Tata Consumer, our total numeric reach is 3.8 million or 38 lakhs. Capital Foods, very strong brand, but in 3.4 lakh outlets. So it's a 10x multiplier if I can get it to all my outlets. Organic India, the runway is still bigger. It's only 24,000 outlets. And like I said, Organic India, there's a global footprint which I can leverage as well. So from that perspective, distribution will play an initial role in the scaling up. But more importantly, when you look at the financial profiles, right, both these products are about 40 to 50% higher gross margin than my own current core, 50 to 55%. So that's very, very strong gross margins, number one. Number two, we see huge opportunity because they were subscale. We see opportunities to optimize their trade margins. And apart from that, the entire cost base that we have, because we've got scale, we can leverage that. So whether it is logistics, whether it is the back end of finance, HR, legal, etc., all these pieces when we leverage, it will be significantly incremental in EBITDA terms, even if I do a standalone EBITDA.
Got it. But, when you say that the distribution will help, scale your financials in all aspects, could you also give us a few, color on the volume? Like how much your volumes are expected to grow in the food business? India food business, I mean.
So, Capital Foods is about 770 crores today. Organic India is about 350 to 360 crores today. Both of them are playing in categories which are growing in the 15 to 20%. Just as a perspective, my base tea and salt portfolio, we expect, I would say, volume of about mid-single digits, value about high single digits. So these are significantly incremental. And like I said, when I do the distribution multiplier, the numbers can transform dramatically and, more importantly, profitability as well.
Well, that was Tata Consumers in a conversation with NDTV Profit. Remember, on the 12th, they announced 2 big acquisitions, Capital Foods and Organic India, for 7,000 crore rupees. Its pricey valuation, though, indicates the good news may already be in the price. And we've got Dharmesh, who can help us understand that better. Dharmesh, Tata Consumers trailing 12-month PE ratio is about 54 times. While its peers, despite the pace of sales and profit growth, is still single-digit returns on equity. Return on capital employed as well is also significantly lower than its peers. How does the stock look? I mean, the upside clearly seems capped, right?
Yeah, definitely. I mean, even if they are doing 9 to 10x of what the management just guided, even after that, the run rate would be 20 to 22% only on the revenue front, and the margins, there is no scope of margin expansion or anything like that. In fact, because of cyclicality of the business, especially the tea business, if organic tea comes into the same segment, there can be downward pressure on the margin. So. But I mean, liquidity is chasing most of the Tata Group stocks, and they're enjoying this frenzy. So enjoy the ride as long as it goes up. But definitely on valuation front, it looks pretty expensive.
I want to come to you, Aamar, just to get a sense of, what would be your strategy on the day on financials specifically. You spoke in detail on HDFC Bank, but let me move ahead of that. Paytm is one which has an interesting note on it out today. UBS has put out a note on it with quite a decent target price, essentially saying the worst is over. Is that something that you're tracking on the charts? Any view there?
Yeah, I would say that looking at Paytm, you can definitely say that the worst is over because the stock really hasn't rallied. So it did rally and then again it has corrected. Again, we are seeing a pullback. But it's more of a consolidation play on the downside, 600, on the upside, 800. So that's a range for, I would say, Paytm. If I look at the long-term charts, the stock has a potential to rally. But again, 800 is a level, that's a cap that the stock would definitely run into because that's a zone of resistance where it would witness some selling pressure. Sustaining above the 800 mark, then we could say that there is a trend change from a medium-term to long-term perspective. So then the stock could rally towards the 950,000 levels. Otherwise, we could witness some consolidation. But on the long-term charts, it's more or less with us. We're trading with a slightly positive bias. 600 is a crucial zone of support for the stock.
Right, 600 is a crucial level of support on Paytm. That's the technical view coming in on the stock. Dharmesh, we are gearing up a market opening and it's going to be about banks. And I think with HDFC's 33% weightage on Bank Nifty, those earnings will be something that markets will start focusing on as from the get-go. The stock went home with a gain of 2% yesterday. Any sort of tactical call over here on HDFC Bank? Would you, initiate, like I said, a tactical buy call on the stock at this stage?
Yeah, we are positive on private sector banking space practically as compared to other NBFC or the public sector banking space. But as far as, stock selection is concerned, I think the better bet would be Kotak Bank, along with ICICI and Axis rather than HDFC Bank, because HDFC Bank has done all the groundwork which is required. But I think still it is 1 quarter away from the actual fruits being fructified. So the branch expansion which they have done, it will take time for them to capitalize on that. And maybe from post-monsoon onwards, they would like to see the benefits coming out there. And serious money will start flowing into HDFC Bank only when the numbers start trickling down there. Because the people who are to be invested in HDFC Bank, they are already invested. So new money is not chasing this counter. Rather than Axis, ICICI and Kotak Bank appears to be more lucrative at current valuation multiples. So I would like to go through the numbers first when they are out. I'm not expecting much from them, as was updated on the business outlook itself to 12% kind of a credit growth. So it has to be a benign number this time around.
All right. Just a few minutes left before we open for the day. We are probably seeing a flat start. That's definitely what your pre-market activity is indicating, that you're not going to see too much of action perhaps, and a guarded approach after the kind of run-up that we've seen. Banks are going to be in focus. HDFC not doing too badly, at least in pre-open, but it remains to be seen where we go. Autos perhaps looking a little weak today. Aamar, let me come to you with your key plays for the day, your top picks for the day, just a few minutes ahead of opening.
Yeah, I would say the first stock is from the pharma space, and that's Aurobindo Pharma. This is one stock, I would say, very strong technically on the charts. It's broken out of major zone of resistance. It's trading at all-time highs, and also the stock has been witnessing significant volumes. So this is one stock one can look at. Any pullback towards 1125, 1130, ideally that can be a good level to enter, with a stop loss of 1077 and a target of 1195 on the upside. And the second stock to look at is Bharti Airtel. This again is one stock which is, I would say, a one-way street right now, technically very strong on the medium-term, long-term charts. And any correction in this stock is a buying opportunity, because there's no sign of trend change, and also the bullish momentum is very strong even on the intermediate and the long-term charts. So this is a second stock to look at. So Bharti Airtel, any pullback towards 1085, 1090 levels ideally can be a good level to buy, with a stop loss of 1047 and a target of 1163 on the upside.
Right. You've also got Aisha Motors that's down 2% pre-open trade. There has been a downgrade that's coming from Morgan Stanley. We'll elaborate on that in a few minutes. But Aamar, I want to come to you on IRFC and Rail Vikas Nigam. Both those stocks have been on a tear, to say the least. After a 16% rally yesterday, IRFC is still indicating to a gap up of about 6%. Rail Vikas Nigam also doing very excited. Railway as a pack, but these two have been leading the way up in the last 10-15 trading days. Is there further room? The risk reward is still in favor of long trades on either of these counters?
See, I would say in these stocks, it would require a lot of courage to enter at the current levels, because the stocks have, if you look at IRFC, it's from almost 80 levels in the month of December. It's at around 140. So the rally has been spectacular and very fast. Also, what we've seen is that the volumes have been significantly high. Delivery quantity has been very high on the charts. It's very strong. So there's no sign of any weakness. But not entry at the current levels, I wouldn't recommend, rather on some significant correction. So for IRFC, the support zone is around 120 odd levels. So any pullback towards that level can be a buying opportunity. If I look at Rail Vikas Nigam, again, it's very strong on the charts. It did make a high of 200, and then again it corrected. Again, it's trading around 225. So again, these are stocks which one can accumulate on any correction, not at the current levels.
Dharmesh, very quickly, you want to comment on that? Railway stocks, some may argue they look very stretched and expensive after the kind of run-up we've seen. But there seems to be no stopping. I mean, you pick any stock from this pack and the returns have been multifold. Upside still here? Anything that you'd buy from this whole pack?
Yeah, definitely. I mean, we have done this railway thing and on your channel as well. But I think from here on, fresh entry should be avoided if you are short-term or medium-term trader. But if you are investor in looking at 2-year kind of horizon, then still they are good value-wise. I think around 20-30% kind of an upside from current levels are likely on both these counters. And not to forget that when the full main budget would be rolled out, there will be additional 20% kind of a budgetary allocation for the railway companies. I mean, all the railway stocks will be enjoying that, especially the rail infra segment. So that additional revenue will come into play. Management has been very bullish. So they have guided for 1 lakh crore kind of order book by the end of this year. So that makes RDNL, Ircon, IRFC all attractive from that perspective, but definitely not in the short term after the recent run-up.
In fact, that's the bet, but it's a bit of a risky one because it is a vote on account, and the assumption is that there's going to be a huge bump in the rail budget. You've also had wire reports yesterday saying that from Finance Ministry sources that they're very keen to stick to their fiscal deficit targets. So is the space there existing for that kind of a bump up to a budget which is already 2.4 lakh crore rupees, to move it up to 3 lakh crore rupees remains to be seen. Having said that, you are just a few minutes away from a market open that looks like it's on to a flat start, Samina.
It is, Tamanna. It's not expected to see fireworks, but that's pretty much been the texture of the market in the last few days. You know, we make a move up and then we spend a few days consolidating, taking some profits off the table, and then, of course, take the next step towards the up move. So all in all, very healthy is what most traders and investors would say. Our market, remember, continues to be a buy on dip market, but this morning is going to belong to financials. Rather, the next 2 days will belong to the bank Nifty and financial stocks on back of reportings as well expected expected from the likes of an HDFC Bank. The day yesterday belonged to tech, 7% rally on Nifty IT over the last 2 days, and it's a morning of a quiet start. Holding on to 22,000, but you are seeing a little bit of soft start, 33 points higher. Remember, global cues are missing this morning, so all we really have is local cues that we will be reacting on. It's all about earnings. Earnings so far have been impressive for the street at least, and that's what we've seen the rally on back of. For now, the Nifty respecting 22,000, trading flat, not about 0.3% lower on that space. Bank Nifty, this is the one you want to watch out for. It's gained for the last 4 days, up about 1.5%. It's contributed as well to the Nifty, but of course, not in terms of being a lead indicator in that sense. Bank Nifty today will be in focus on back of HDFC Bank, which will report numbers later on in the day. Broader markets that have underperformed the benchmark over the last few days are actually interestingly outperforming. Mid-cap is up 0.2%. So on the way up, there's underperformance. On the way down, the broader market's actually doing much better than the benchmark itself. So mid-cap and small-cap both not looking too bad in trade this morning. But let's pull up the big movers and shakers. Your oil and gas stocks are in focus on back of your windfall tax being reduced to 1,700 from 2,300. So the likes of a BPCL, HPCL, or OMCs as well, actually, Coal India, ONGC are counters that should do well. Very few gainers, actually. You've got a few auto names that trade flat, but your biggest gainer is only 1% higher, very different from what we've seen on the markets in the last 2 days. On the sell side, the list is far more extensive, so the breadth clearly in favors of the losing stocks. You've got banks that are looking quiet. HDFC Bank, if I can quickly take a look at that, so subdued. Very, very nervous, if that's the word I can use, after a 2% up move yesterday. Traders and investors on the sidelines on HDFC Bank. Banking as a whole pack is not looking very good. And you've also got NTPC on back of brokerages, Infosys seeing profit taking, so is TCS. RL as well, which has been a pretty big contributor in the last 1,000-point move, is actually taking a bit of a break. So Tamanna, on expected lines, no excitement, no euphoria. I would say a very mature morning for the street.
Well, look at the change in mood. Wipro behind you down almost 2%. So the stars of yesterday facing a tough time this morning is how I would say it. Profit booking in the IT counters, just managing to not do badly on their quarterly numbers is not being rewarded by the street anymore. But let's take a look at some of the counters which had news flow earlier this morning, was on our watch list, and see what happened to them on open. I'm going to start with Paytm. Good note by UBS, which has initiated coverage and a buy target of $900. Paytm about 1.5% this morning, and they say that the worst is over. Regulatory issues have passed for payments, so they expect Paytm to benefit. Geo Financials, just a quick look at the impact on companies which had numbers overnight. So yeah, not too happy with all three. Angel One, we spoke about extensively in the trade setup about how Angel One had not really performed. At a time when we're talking about more and more participants in the market, margins are facing pressure. That's talk about 8.5% down. Geo Financials as well. The numbers aren't great. The potential lies in what's going to happen up ahead. They've unveiled their strategy. It had run up before the numbers came through, and that's talk about 4.5% down. Kesoram is not doing too badly. Relatively, all things considered. Let's look at a few more that are on our radar, and we should also look at what's happening with the aviation pack. You had market share coming in yesterday, and Jeffrey's note on stability in the market, though December passenger numbers have not been that high. SpiceJet, though, having lost market shares, doing better than Interglobe. Maybe it's all the social media hate also that Indigo is receiving right now. What with passengers stuck on tarmacs and more so. But the real action really lies in the OMC space this morning, I would say, Samina, with any positive news getting rewarded in that sense, and investors looking for an opportunity to sell.
Yeah, there are some spots in the oil and gas pack that are moving, but to be very honest, the one stock that I can't get my eyes off is IRFC again this morning. So again, 16% up move yesterday. You've got another 8% move on the counter. I mean, these are unheard of returns or gains that we're seeing on counters. If we can pull up IRFC, it's 8% higher, but pull up what the stock has done in this week. So the last 5 trading days, if we can get IRFC on the screen, it should help us understand the kind of momentum and movement these counters have been seeing. Okay, I believe we can't do that, but we'll come back to that in a minute. You've also got the other railway stocks. So Railway Nigam, if I can, Railway Vikas, if I can pull that up, should be doing well, but IRFC is 5% there. So this is the kind of sentiment that's playing out. It has been sector rotation we've been talking about, but the sector rotation cycle is clearly getting shorter as we speed. See, apart from that, Capri Global, I want to bring that up because it's gaining on large volumes. 11% higher is what we have. You've also got Aster DM Healthcare. That's the other top gainer on the Nifty 500. 12% move on Aster DM. We've talked about IRFC, which is gaining on about 63 million shares have changed hands. You've also got some of those metal names that aren't doing too badly. On the sell side, though, Tamanna mentioned a few ones that were getting a thumbs down on back of earnings like Angel One. But Avanti Feeds is seeing some profit taking after a sharp move over the last couple of days. Also, what the mention is the fact that Wipro, Oracle Financial Services, all those counters taking a bit of a break. Motilal also declining along with Angel One. So we saw numbers from Anand Rathi. Numbers were good. The street gave it a thumbs up in terms of stock performance. The counter went home with a cut. Anand Rathi, that is, of course. Angel One, on the other hand, numbers were a mixed bag. The street is definitely not pleased on back of the kind of margins we've seen. And of course, the other income, in the case of Angel One, the stock is down 2%. That sentiment is spreading for the sector. Motilal Oswal also trading the cut of 2.5%. But an Aisha on back of the downgrade from Morgan Stanley looks slightly weak. But Tamanna, it's a day which is required given the kind of euphoria that we've seen. So I think we are literally taking a step back, consolidating our chips and probably getting ready for the next up move. And reaction is justified. I mean, an Angel One numbers were slightly weaker than what we'd have liked, I think, to see.
You know, this whole result season is being looked at as a sort of doodh ka doodh, pani ka pani, because you've had a massive run-up in the end of 2023, and are the numbers actually telling the same story? I just want to point out what's happening with the healthcare pack and a bit of weakness over there. Look at Oro Pharma, Metropolis, both seeing some cuts there, not very sharp cuts, but definitely some cuts this morning. Syngene as well, Lupin, Divi's Lab. So a bout of weakness coming in on the healthcare pack. Quick view from our guess on where you see the markets going. Aamar, I see the Nifty at least settling or holding on above 22,000. Is this sort of a breather that we're seeing on the charts right now, or there is more pain coming in?
No, I would say that this is a very likely scenario because post the sharp run-up, we definitely should see some consolidation as well. Because if I look at the daily charts, they point towards consolidation. Intermediate term trend very strong. So what it effectively means is that's the reason any pullback, we are seeing a sharp recovery, and also most of the other technical parameters, they support the market. And also what we are finding is from time to time, different sectors are taking over. So that also is helping the markets. But yeah, it's a result season. So the results of the heavyweights and across the board, that would have an impact on the markets. So as far as Nifty is concerned, I would say the levels to watch out for is 21,900, 950 on the downside. That's a level to watch out for on the downside. On the upside, 22,150. Any pullback should be used as a buying opportunity because we are still not seeing any trend change. So it's more of a consolidation, but the trend still remains in favor of the bulls, and they are strong there. Also, the derivatives data has been positive over the last couple of days.
Aamar, do you track Mazagon Dock shipbuilders? The stock is up 4% in trade right now. I know IRFC, you said, would require a brave heart. What about Mazagon Docks?
I would say this is one stock which again had a dream rally. Currently, it's around 24.44, 24.30 or so. So if we go back in time, so in September, it had made a high of 24.84, 85. That was a high that the stock had made, and from there it had corrected all the way towards 2080 level. So we saw some significant, again, it's trying to breach that level. So its all-time high was 24.85 in the first week of September. So the stock is trying to reach or breach that level. So that's the level to watch out for. So 24.80, 2,500, I would rather say look at booking profits than entry at current levels.
Dharmesh, I want to come to you on some of the IT pack and HCL Tech down about 2% now. All of them down in the red. Anything that you think is worth picking up right now? Would you wait for further corrections?
No, Tamanna. In fact, yesterday only we gave a call to sell our IT stocks as far as, trading or thematic basket concept was there. We did have initiated the entire pack about a couple of months back as a buy. The results, the way I look at the results is there has not been any negative news. At the same time, there has not been any positive news. So companies have still maintained that 2 quarters to go before they can see, incremental growth prospects picking up. Till that time, it is more of a constant maintenance kind of revenue and bottom line is where they are looking at, including the margins. So I don't think with such kind of lofty valuations, one should be going into as a positional buy or investment buy or even as a tactical buy. So we would wait for some correction to set in and then we'll take a call as things progress in US on the discretionary spend and the shift to the product composition on the IT platforms, which has already happened for US companies. Indian companies are still to catch up with that. So it was a hope trade which has played out and still it's a hope trade for the IT basket. So we have given exit yesterday itself for all the IT counters.
I agree, Ramesh. It's almost like missing the woods for the trees with a lot of these IT stocks. But Aamar, you want to come in on Reliance Industries? It's contributed quite well in the last 1,000-point up move on the Nifty. It's up about 8% in the last 5 trading days. And for a stock, a heavyweight like RIL to move 8% is definitely worth noting. At 2770, does RIL look good? Also, earnings expected this week.
Yeah, I would say that the stock technically looks strong on the charts, be the intermediate or the short term. Long term, yeah, it has broken out of its all-time high, so that reflects that there is a strength in the stock. But at current levels, I wouldn't recommend entry because the risk-reward ratio might not be very favorable. Because the stock, if I look at earlier, it was unable to breach the 2600, 2650 zone. Now it's around 2770. So 2650, 2600 zone, that's a strong zone of support for the stock. On the upside, the stock could rally towards the 2830, 2850 zone. So the risk-reward ratio wouldn't actually warrant entry at the current levels. But the trend for the stock remains strong from a medium term and a short term perspective. Long term, yeah, the trend is up, but there's not very strong momentum on the long term charts as of now.
Yep, Capri Global Stock Samina spoke about has applied for an insurance platform. They're planning to set up an insurance platform for institutional clients and 12% up on that stock. So definitely some spots of green there. But Aamar, I'm going to come back to you on Oro Pharma. It was one of your picks. It's seeing a bit of pressure here today. Do you think this is a good opportunity to buy, and anything else in the healthcare space that you like?
Yeah, I would say that Oro Pharma, yeah, any correction can be used as a buying opportunity because the trend remains strong. So what we are seeing on the daily charts is some sort of consolidation. So the stock could consolidate. So any pullback should be used as a buying opportunity. As I said, the stock has got strong support at lower levels. So 1100, 1120, that's a good zone of support. And the other stock from the healthcare is Piramal. Piramal Healthcare is one stock, Piramal Pharma. So that's one stock one can look at from a medium-term perspective. The stock is currently on 140 levels. It was consolidating, unable to reach the 100, 120 mark. So the stock is strong on the chart. So any pullback in the stock can be used as a buying opportunity because the stock has an upside of 165, 170 levels.
Ramesh, Polycab it got thrashed in the last couple of weeks with so much of information around that IT raid. The management, of course, has responded. They've said they haven't received a notice yet. And post that, we've seen a little bit of recovery come into the stock in the last 3 days. Also, it remains in an F&O ban, which could be providing some support or preventing a big fall. But fundamentally, this is an event-based reaction on the counter that we are seeing. Keeping that very well in our minds and the clarifications we've received from Polycab, would you use this opportunity to maybe strategically add to Polycab? And this is not for the near term. This is more from a medium-term perspective.
No, see, just a corporate governance issue being raised. The very fact that raid has been conducted and the report is still awaited by the department. So we'd like to see the report first. And there has been speculation, and because of that, the stock has been waiting out there. So that was an unfortunate part because let the report come first, and then we see where the management stands as far as corporate governance is concerned. So anything to do with corporate governance is an absolute no for us. But the sector remains very strong. I mean, the entire wire and cable segment is pretty strong for the next 2 years. We see the kind of strength which is there. Even when we talk to all the dealers and the checks which we do, the demand has been pretty strong. So KI Industries and all is a better current juncture. And post the clarification comes and we'll see how to take it forward. As of now, we are not recommending polycap to our clients.
All right, we'll take a very short break. Thank you so much, Dharmesh and Aamar, for staying with us through the morning. It's looking like a bit of a wobbly start for the Indian markets. A bout of profit booking, and no one will argue that's not too healthy. IT companies are leading that bout of profit booking and the weakness that we're seeing in the markets. But flat. Markets are flat right now, nothing to really panic about. But it is result season, focuses on the numbers. And on the other side, we're joined by Fedbank Financial's Anil Kothuri to decode the company's Q3 numbers. Stay tuned.